Hey, happy Friday, March 17th. This is the Friday Night Ride Out with your host, Carlton, CEO Cobra. And today's episode, we're going to talk about tax savings for small businesses and why should you start a small business for tax savings. It's a pretty good science show today, and I really hope you enjoy it. Okay, the United States tax code is designed for businesses and real estate investors, because the businesses is what keep Americans running. The businesses provide jobs, provide income for people, and the government will give you tax breaks for starting a business or getting real estate. That's the two main important things, to keep the American going. So the government, the tax system is designed to reward entrepreneurs and the real estate investors, because that's what keeps America going. And the first thing, if you want to start a business, the first thing you really need is an LLC, stand for Limited Liability Company, or corporation. And I have a video right here that's going to walk you. Make sure you get all your paperwork, your EIN number, and then you can pretty much set up a business. Within 24 hours, you set up. What I advise you to do is don't put your personal address on your LLC, because whatever you put on your LLC is public record. People gonna look it up online. If you got kids or something, you don't want people going to your house, so don't really put your real address. I advise you getting a virtual address, like the one over here. iPostal. There's a lot of companies. I started iPostal. Get a virtual address, to start a business, to keep your finances safe, to keep you out your house. That's the main way to start a business. And we're gonna get into these tax savings right now. And the beautiful thing about starting a business is because you can actually get tax savings from stuff that you're already doing already. You can get tax savings for meals, your car reimbursements, your equipment, because the government actually give you, if you're a new business, they actually allow you to take up to $5,000 of tax savings when you start your business, when you start a cost of a business. So that's really a good thing. You can really take advantage of tax savings. And if you have a car over depreciation in the whole first year, if you have a car over 6,000 pounds, I have a video right here. That's another bonus way to save money is, if you have kids, you can actually pay your kids up to $12,000 a year tax free. All you gotta do is just.
When you have a home-based business, you get to hire your children to work in your home-based business. You can pay each child up to $12,000 a year. You have 2 children. Mm-hmm. When you pay them a salary, that's now a tax write-off to you. Right. And the money that you pay them is what they use for allowance, right, and books and school clothes and school supplies. If you need money from me, I send you the money, a job description, and a 1099. That's what you get from me.
Hey, listen, you all have got to think about this. This is what wealthy people do all the time. Yes.
So right now you've got $24,000 in tax write-offs, your cell phone bill, also your mileage on your car, gas, repair, getting your tax title, insurance, all of that stuff. Cable. The only reason I have cable is so I can watch and see how to be better in my life. So that's a tax write-off. I went and bought a Bible once, Steve, and that was a tax write-off too, because I needed the spiritual wisdom to know what to do with my money. That's a tax write-off. Everything is business. Everything. The average American knows about 7 or 8 tax deductions. There are over 450 tax deductions. So I say you have to be a student of the money game, get the information. And that's because the IRS code is so vast, but if you go and get publication 15, you can find out a lot about what I'm talking about.
Okay. In my opinion, the best tax deduction is the real estate tax deduction, because you can actually take off the depreciation of your property. You know, you get a rental property, and your homeowner, you can actually take the depreciation off your house. I got a video, I posted right here saying how much depreciation you can take in a year. And I got a story of a guy, you know, in Cincinnati that was an online marketer. He did online marketing, and he took, instead of paying $300,000 taxes, he took that profit and bought a rental property, a big apartment unit, and he was able to knock off $200,000 off his tax because of all real estate, the depreciation. So that's the big thing. You make a lot of money, you know, you still paying taxes on it, invest it to the rental property. Because if you get a rental property, it's not earned income, it's passive income, so they don't really tax passive income as much as they do the earned income. So if you get a lot of money, invest in a rental property, invest in a business, invest in something that's going to help the nation grow and prosper, and the government, because if you help people get the real estate and the houses, then you actually partner with the government, and they give you really big tax savings on that.
Depreciation is, it essentially says, instead of you taking a depreciation write-off over the next 27 and a half years or 28 and a half years, you could take it over the next 7 years instead. So that's what I did. I took an accelerated depreciation, or something called bonus depreciation, and I took a huge write-off for 2021 because I didn't really want to pay taxes. The moral of the story is, increase your income by starting a side hustle. Use that income to buy real estate or an asset class, and then use the depreciation to offset your higher income. And then eventually you're going to have to pay that if you ever sell that asset. But me personally, I'll do something called a 1031 and just move it into a bigger asset and then do the exact same over and over again. And so each year I can make more and more money and pay less and less taxes. That is what the rich do.
Real estate and the houses, that you actually partner with the government, and they give you really big tax savings on that. Okay, and one of the hidden gems of the tax savings is called the Augusta rule. Is section 280C. That if you're a home business, you can actually rent your house to your LLCs for 14 days. But it has to be the market rate of Airbnb. You gotta go online or search Airbnb to find the market rate in your area. So if you go Airbnb and your house is $100 a night and 14 nights, that's over $1,400. You can save tax savings. It depends on your area, your market. And I got a video that would give you the rundown of what the process is, what kind of contract you got to fill with your LLC. I got a video right here. I'm going to show you all the details about this Augusta rule right here.
The first thing that we want to look at when we talk about the Augusta strategy is, first and foremost, what is that strategy? It's basically the tax loophole that allows a business owner to rent their primary residence up to 14 days, particularly 9 consecutive days at a reasonable rental price. And so it's recommended to do comp analysis on what that reasonable price is. And I'll show you how we handle that internally. The home can be used for a variety of business purposes, but it can't be a full-time rental property, and you can't go past the 14 days. If you go past the 14 days, then all the benefit, you lose the benefit. Now, to qualify or to substantiate for the Augusta strategy, there's a couple things that must happen in order to be able to substantiate and put your client in a defensible place against audit or examination from the IRS. The first thing is have a written rental agreement in place between the S-Corp or the entity and the homeowner or the client. There must be thorough documentation supporting the rental price. So we can't just pull a number out of the air and say, okay, well, I think the rental price should be X amount of dollars. We've got to substantiate that. What's the area in and around the home, and what are you normally renting from? And then obviously the business entity must be structured primarily as an S-Corp, C-Corp, or a partnership. It can't be a Schedule C for self-employment income unless it's a single member LLC, in which case I would typically encourage our clients to move into more of an election of an S-Corp status or create an S-Corp that manages that other LLC.
Today, you know, our next show is won't be for 3 weeks because there's no, the first Friday is on 3 weeks away, so I got a break from the show. But can you come back April 7th? It's going to be a Shopify episode. We'll show you how to get on Shopify store, on e-commerce store, and I will try to work on having an introduction of the Friday Night Ride Out. The first introduction of the Friday Night Ride Out. You know, I'm taking a little break from the show, but I'm still working hard every day, you know, improving the show. The show's growing. I'm getting a lot of followers, a lot of likes and stuff on the show, comments now. So I really appreciate people watching the show on Facebook Live. To do that pretty soon. So I really thank you for watching the show. You know, thank you for supporting Web State Solutions and Friday Night Ride Out and your host, Carl, CEO Cobra. Just have a good night and sign off. See you in 3 weeks. I got a good outro video right here for you. Right here. Peace.